JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 1st of December 2020, guys. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're gonna have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay guys, so I hope you're all ready for the last trading month of the year. Of course, for some maybe it was a good one, but probably for the rest maybe it was a bit of a disaster one. So maybe a lot of people are already kind of wishing this year away. We're hoping for 2021 to be a little bit better than the 2020 year. So of course, let's see what's gonna happen in the new year. Let's not over speculate on what could happen, but just sometimes just go with the flow, guys. And and the same similar stories with the markets as well. So sometimes we try to predict the future, but sometimes the future doesn't really happen this way. So yep guys, at the moment let's see how everything will shape up in the markets in the last trading month of this year. But before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. Now so jumping into those forecasts now, looking at Nikkei, yesterday we saw Nikkei kind of popping above this 26,706 territory, but then ending the day in the red, and yep, it kind of still remained above this steep upside support line taken from the low, the 30th of October. Now, what I said previously to you guys, that in a way, if this upside line continues to provide somehow support, then yes, we could consider a move higher here. However, now given this recent up move, I would actually prefer to wait for a push above this barrier right here, which today we did get a fractional move above it, this 26,834 mark, which is yesterday's high. If we get the daily candle kind of staying above it, then yes, higher levels could be met. The only little issue here, of course, is the fact that from the end of October or the beginning of November, the up move has been quite a steep one, and basically maybe there could be a bit of a correction at some point, of course, but at the moment, until we get that signal, we cannot really talk about the downside. So for me, let's say to consider the downside at this point in time, well, first of all, I would need to see this short-term steep upside line getting broken and the daily candle remaining below it, and then of course, yes, lower levels could be met, because then we could start aiming for the this 26,000 territory I talked about yesterday. Previously I said that I would get a little bit more excited with the downside if I get a drop below the 26,000 territory, but to be honest, I mean, it could just strengthen the downside idea if we get a slide below it. But if we get a break of this upside line, yep, we could start looking at some lower areas, guys. And we are at a very interesting spot right now. So let's see if this Christmas rally will continue, or will it actually fade away and reverse back down before the end of the year. So But long story short, guys, still I'm keeping an eye on this 26,834 zone. If we get a nice pop above it, then yes, higher levels could be met. Now Shanghai Composite, and look at this beautiful move here, a nice beautiful rebound from this 3,387 territory. I talked about this level previously. That is the high of the 10th of November, and yep, the index made its way back to this upper bound of this range. So now the big question here is, can it actually continue to provide resistance? Can this upper bound of the range, can it do that? Well, for now it seems that it's doing the trick. It seems that it's doing its role. That level is, by the way, near the 3,457 territory. So let's continue monitoring it. If that gets broken, if we get a nice daily close above this area, well, I mean, maybe this could increase the chances for Shanghai Composite to drift further north. But at the moment, well, I mean, I'm gonna be a little bit more careful, just because, like I said, yesterday the equity markets in the US did reverse a little bit to the downside, but again, let's not over speculate too much. Sorry, I do apologize. Didn't reverse to the downside. Yeah, it did. Okay, let me just quickly, I think they've ended virtually unchanged. Let me just quickly double check that, guys. So yes, absolutely, there we go. So yeah, I was right the first time. Started doubting myself. Yes, they did reverse to the downside. Initially they had a good push, and the cash equities did have a good push. However, still the markets ended in the red. Now basically, at the moment, that's the reason why I'm saying that be very careful with it, because if we see a continuation move lower maybe today, then well, the Shanghai Composite could also maybe drift lower. So at the moment, of course, it's looking quite strong. However, we need that confirmation break still, so above this 3,457 territory. So for now, I'm gonna keep an eye on that one. In terms of the downside, I'll get a little bit more excited if we get a drop below that 21-day EMA, which in a way that drop could come on a break of this 3,368 zone. For now, I'm gonna be very careful here, and yep, I'm gonna still aim for a little bit for a few higher levels here, but like I said, only if we get a break of this above this upper bound of the range. Now jumping into DAX, DAX, you can see that had a really good run to the upside yesterday, but then got squished, and yep, it kind of drifted back down and ended the day in the red. So but most importantly, that it ended the day back below this 13,300 zone. So which means that it kind of raises a few concerns here, or I should say it could raise a few concerns. However, if we look at the cash index, we can see that the cash index actually climbed back up again. So basically, in other words, we can say that this level, the 13,300, is no longer kind of valid. So we can say that because it got violated a few times, and the index stopped respecting it, let's put it this way, there is now that we can remove it basically, and we can focus on some other levels. Now, of course, one of the levels that I'm going to keep an eye on is this 13,347 zone. We are currently above it on the cash index. Let's see if the index can remain today above this area. If it can, then yep, higher levels could be met. We could start aiming again for this 13,460 zone, which is the highest point of September, and then we'll take it from there. If that gets broken, of course, yep, higher levels could be met, but if it continues to provide resistance, then another slide could be possible. However, what you could do here is, if you want to look at some lower areas, well, keep your eyes, like I said, keep your eyes on this 13,347 territory. If we get a drop below it, maybe this could open the door for a bit of a larger correction to the downside towards this little short-term tentative upside support line taken from the low, the 13th of November. And if that provides good support, a nice rebound here could be possible again. But again, at the moment, we have the index trading near the 30,400 level, just slightly below it basically. But let's see how this day is going to play out, because again, we are at a very tricky spot. We are near this key resistance area, which is around the 13,460, and a break of that area would confirm a forthcoming higher high. So yep, keep your eyes on it. DXY, another index, but this one is a dollar index, and look at this beautiful move yesterday. Basically, initially drifted lower, and I was more bearish than bullish. However, what I was saying is also, if it stays below this 91.75 territory, then yes, lower levels could be met. But as you can see, this is the this is the perfect example where you always kind of, if you're not really sure, or if you think that it sometimes can be, I mean, maybe too close, then wait for a daily candle, because as you can see here, initially was driving lower here, but the daily candle still ended up being above the above this 91.75 territory, which is the highest point, oh sorry, the lowest point of September. This morning we're seeing a bit of a corrective move here to the downside. However, it still balances above this hurdle. Now, if it continues to balance above this hurdle, yes, we might maybe consider a push higher, but I'll pick up on this definitely later on in my trader's tea time, just to see how everything is getting along. But if it continues to balance above this 91.75 territory, then, well, I mean, then we could see a nice rebound here and a push higher, especially if the price climbs above the 92.61 territory right here. But we'll get to that point, guys. For now, all eyes are on this 91.75 territory. Gold had a good reversal, but it's fine, it's okay. Didn't really reach this 1756 territory that I talked about previously, but instead kind of instead it reversed somewhere from around here, from around the 1763 territory, something like that, if I believe 64 even, and yep, it's now traveling back up. Now, even though it's pushing higher here, I'm gonna keep an eye on this barrier right here, this 1795 territory that I spoke about previously, which is acted as a good area of support, but now this could be seen as a resistance, or this 200-day EMA, even better probably. So the 200-day EMA, if that remains intact, if the price is struggling, or should I say struggles to overcome this, then yep, another round of selling here could be possible. We also have this downside line taken from the high of the 9th of November, so if that also continues to provide decent resistance, then, well, I mean, the downside scenario is the more likely one. However, if that downside line gets broken and the price climbs above the 1818 zone right here, then yes, higher levels could be met. Now, jumping into WTI Oil. Now this one's a tricky one, and so far it's kind of working according to the idea that I talked about yesterday. Basically that we got a break of this short-term upside support line taken from the low the 2nd of November. Yep, okay, that's great. For the sellers, could be. However, still, even if it drifts a little bit lower here, if the price remains somewhere above this highest point of August, which is around the 43.75 territory, yep, we could see a nice rebound and a push higher. So that's why don't get caught up in this, guys. Be very careful here. We've seen something like this happening several times. So yes, the upside line got broken, but don't forget that this upside line was a short-term one, a tentative one, and maybe didn't really carry much significance. So first of all, let me just get rid of it. It was a good gauge. Now we can get rid of it. We can see that yes, again, it got violated. So now all eyes are going to be on this 43.75 territory. If it continues to provide support, then we can see a nice rebound. In terms of the downside, well, previously I talked about this level, the 43 zone. I'm still going to keep an eye on it, but probably now looking at this whole picture, I would probably maybe prefer to wait basically for a drop below the 21-day EMA right here, shown as the yellow line. Again, depending on how this is going to move, it might take a while, and let's say until it could drift a little bit lower here. So maybe the 21-day EMA could approach this 43 territory, and basically all this could work out nicely here, could coincide nicely with this level. So So yeah, for now, guys, be very careful here, be very cautious, and let's keep an eye on this 43.75 territory. If the commodity decides not to travel to this area, instead it starts pushing higher, then all eyes are on the 46.24 zone, which is the highest point of November. A nice good pop above it would confirm a forthcoming higher high. So again, be very careful near these two levels. Litecoin, quick update, similar story to Ethereum that I talked about yesterday. Basically, Litecoin is kind of getting back to these levels that it tested last week. So okay, that's fine. As you can see, it found a bit of resistance right here near the high of the 23rd of November, which is around the 90.74 territory. Today, this is where the crypto got stalled. Now the big question here is, can it push further north? Because as I mentioned to you guys yesterday in Ethereum, that maybe we'll get ourselves a potential kind of a double top pattern. But again, we cannot talk about that yet because we haven't seen that rejection here. I mean, only once, but probably we need to see a few more rejections before we could consider a possible double top here. But again, at the moment, it's still the more kind of the stronger idea here, or say is the upside idea, because we're still trading above these short-term upside lines here. For now, guys, keep your eyes on this 90.74 territory, a break of which could open the door towards the highest point of last week near the 94 zone. But if that gets cleared, well, guess what? This would confirm a forthcoming higher high, and we could start aiming for these levels here that we saw here previously, those in the hundreds. So yeah, the next target, of course, could be that psychological 100 level, but again, for now, let's keep an eye on this one. Let's see how it's going to play out near these two key resistance areas. Now, AUDJPY, here the pair is still stuck. I mean, I keep on monitoring this because it's quite interesting. Because again, we're trading above this upside support line taken from the low of the 2nd of November. We're near this key resistance area, which is around in 77.10 zone. So basically, for now, we need to see a pop above this area in order to aim for some higher levels. Again, we're not really getting that yet. We're very close to this upside line, so basically anything can happen here. Although, yes, we could maybe say that potentially this looks like a possible maybe ascending triangle. However, it's not an ideal one, because maybe the ascending triangle could be from somewhere around here. So basically, we could see a break of this upside line. We could see a drop lower. Maybe it could get a hold up somewhere around this 21-day EMA with a small false breakout, and then it could reverse back to the upside. So again, something like this could be possible, but again, this is maybe me getting a bit ahead of myself, so let's forget about this. I'll consider this idea if we get a break of this this upside support line taken from below the 2nd of November. And that's one of the reasons why I have my downside scenario from around here only, this 75.76 zone, because of one of those other lines that I just removed. So be very careful. For now, we're looking at some upside, but I need to see that confirmation break here above the 77.10 zone. Ideally, a daily close above it could do the trick for more buyers. Now, quickly on USDJPY, beautiful rebound from this upside line. I talked a lot about this, guys, last week, and then yesterday I talked about this, and I was telling you to keep an eye on this upside line taken from the low of the 9th of November. So great news for the bulls. We did get a push higher. However, as you can see, the 21-day EMA continues to do its job. It continues to provide decent resistance. So again, this is going to be a bit of an interesting one. If we get a pop above this 21-day EMA and shown as the yellow line, and it stays, and the daily candle stays above it, then wonderful. We could start aiming for this downside line taken from the high of the 24th of March, and then we'll take it from there. But for now, we're also very close still to this upside line, so we're not excluding a possibility of a potential kind of reversal back down here. And a drop below the 104 zone could do the trick for more sellers. Excuse me. Now, EURGBP. Yesterday, if you remember, I talked about EURGBP, and what I was saying that because we needed to see a break of this 0.90 or 0.9004 level, we were not really kind of considering the upside. Although yes, yesterday everything was kind of indicating for a possible move higher, but as you can see, the pair did find this downside line as a good area of resistance, and we started moving lower. But what I was saying yesterday, excuse me, as well, that I'll consider some lower areas if we get a drop below below the 21-day EMA and especially the 200-day EMA on our daily chart. As you can see, yesterday we got a hold up near this 200-day EMA, but today we're continuing to slide here. So now it's going to be interesting to see if we can actually drift all the way back here towards this 0.8866 territory. So be very careful with this one. I mean, I'm aiming for some downside right now. However, if this suddenly starts reversing higher, then if I see another test of this downside line, then well, this is where probably I could exit my position here and kind of take a loss, of course. But then of course it could present itself with another opportunity for the upside, because if we get a nice pop above the 0.90, well, let's put it 0.05 level, then yes, higher levels could be met. So this picture clearly shows what's happening here on GBPUSD. Basically, EURGBP is showing what's happening on GBPUSD and EURUSD. So GBPUSD is popping nicely to the upside. Yesterday did try to move higher, but failed to reach this 1.30. Let's round it up here a little bit, the 1.34 zone. Today you can see that already the pair is kind of coming close to it. So now the big question here is, can it actually overcome it? I'll keep an eye on this one. For now, everything's kind of leaning more towards the upside, but I need that confirmation break here first. So let's see, let's wait for that. Let's not rush into anything yet, but if this pair suddenly reverses sharply to the downside and then drops below this highlighted area, well, that's where maybe we could consider a bit of a decline. And finally, EURUSD. So yep, it's also pushing higher, however still not as strongly as GBPUSD. Of course, I'm still kind of aiming for that psychological 120 zone. Yesterday we had a test of that area, beautiful test, and then yep, as you can see, the pair reversed back down, however remained above this 1.1918 level I talked about. As you can see, this highlighted area right here, the upper one, yeah, today we're having a nice rebound from it, and it could be another attempt of a test of this psychological 120 zone. Of course, everyone's kind of leaning towards that right now. However, be very careful if it starts suddenly dropping lower and falls below the 1.1918 territory. Well, this is where you probably need to abandon the upside scenario for now, and then yep, we could start looking at these slightly lower areas. So again, guys, we already had a nice push higher here. Maybe we'll get a small little pullback here, a throwback here, and then maybe another attempt to go for that 1.20 zone. But again, let's see how all this is going to play out. For now, that's the game plan. I'm still aiming for that 1.20 zone, yeah, let's see how all this is going to play out. So guys, I really hope you found it useful. I'll have to wrap it up here. Thank you very much for watching and listening. My colleague is jumping into his video in German, so yep, if you're fluent in German, then feel free to join his seminar, his video straight after mine here. Yep, and I hope you find it useful as well, guys. So anyway, have a wonderful trading day, guys. Stay safe, both health-wise and market-wise, and I'll see you later in my traders tea time, 14:15 GMT. So looking forward to that, guys. Thank you very much, and bye-bye.